Good morning, Forex family. Man, we here, 6:20 in the morning. This is Thursday. It is March 7th. Hey, it's time to get with it. It's Forex time, NZD JPY. We about to jump into it real quick. All right, NZD JPY. Man, been just going through some currency pairs and finding some trades and some setups that I really like. And I just want to make this video showing you guys real quick this NZD JPY right here on the NZD JPY. This weekly time frame. I know we use weekly time frame for direction, but real quickly, I just want to show you guys that this right here. Hope you guys can see it. You guys should be able to see it when I draw it up. Hope you guys see that channel right there. Do you guys not see the channel? We have a channel on the New Zealand dollar, Japanese yen on the weekly time frame. And as you can see in this channel here, if we buy the support in the channel, market goes up. Buy the support in the channel, market goes up. Buy the support again, market goes up. Buy it, market goes up. Buy it there, goes up again. Every time the market comes into contact with the support, and then the market, for some reason, I guess that was some type of market news at that time, but even still, it came through, but it went back up. That even though that wick is going through it, the market still came back up, and now the market is going up again. And then when you look at it from the resistance standpoint, once it touched their resistance, you sell. When you sell the market, it goes down. Market comes up, you sell it, goes down again. Comes up, sell it again. Market comes up to resistance, you sell it, and it goes down. So right now, the market is going up, and we're going back up to their resistance level. So be on the lookout for buy trades. We still are about 100 and so pips away. Could be getting you some nice profit here on the could be getting some nice profit on buy trades in NZD JPY in the last couple of weeks. So NZD JPY, that's the weekly time frame. We have our direction. We have this channel here. So we have a downtrend channel. So right now, market is going up. So we're looking to buy to this resistance level. So we'll go to the daily time frame. Daily time frame is for high and low prices, and we're looking to buy, so we find a high or a low price. If we have a low price, we will buy that low price and we will hold that low price. So we'll try to find the crown formation here on Sunday, December 2nd. And we go back to December 2nd. Actually, not December 2nd, because it's a daily time frame. Now we can do it on the 1 hour time frame. You see, guys, I still get that mixed up sometimes here and there when it comes to trying to find crown formation. Because we'll find a crown formation on the daily time frame, we'll probably bring it all the way back here from whenever we have a trend line break. But on the daily time frame, is that a high price or a low price? Right now, that is a we have three bearish candlesticks, so we can bring in a counter trend line. So with three bearish candlesticks, we can bring in our counter trend line, and yes, that will constitute a low price. That right there will constitute a low price. So on the daily time frame, we would just wait for the market. Daily time frame, we will just wait for the market to break this counter trend line, and once the market closes bullish over this counter trend line, then we'll buy the market. But that's the entry for a position trader. If you want to take a trade and you want to hold a trade. But let's go ahead and find those trend lines that have been broken and find the overall crown formation. But we got multiple levels of resistance, so the actual downtrend would have started right here. So let's zoom in on that area and bring in a smart trend line, down trend lines. I like mine's red. And actually, let's run some Fibonacci's while we're here too. Alright, reset twos. Let's see what we got here. And and you can see we have down Fibonacci's. We don't have a crown formation at the present moment because this trend line is still intact. So we don't have a we don't have a crown formation at the moment. So we're still in the sell zone according to the daily time frame, and the market is at a nice low price based off of the weekly time frame, because we want to buy this market up to the resistance level. As you can see, the market has been going up the last couple of weeks. We're entering the overbought zone, but we can still salvage a few pips here until we get to that resistance point. Because once we get a trend line break or something, then we can look to start selling. So we'll bring in a trend line. And on this trend line, you can see right here. And okay, you can see on this trend line right here, this trend line has been broken. You guys can see that right there. See how this uptrend line has been broken? So that could give us an idea that the market is getting ready to reverse. Now, when it comes to the stochastic is going down into the oversold zone. We will want to wait for the market to come back into the overbought and then get a counter trend line break and then start selling. So, but with that being said, the daily time frame is telling a different story from the weekly time frame. Again, weekly time frame, when we sell these high prices, the market falls, and when we buy these low prices, the market goes up. So the market doesn't always actually hit this resistance level, but that still doesn't constitute that the market will not hit this resistance level. So we'll just keep in mind that the market's going to do what the market wants to do, and as the technical analysis goes, and retail traders, we want to make the best out of every situation possible. So even with this being said here, the market could be getting ready to reverse. So we're just going to keep a close eye. Hold on, guys. Here come the notifications at 6 o'clock in the morning. All right. So with that being said, daily time frame, we do have a downtrend line that is still intact. The market began to retrace, and that was right after it hit a 1618, the extension on this Fibonacci here. So we have a new Fibonacci that has just formed, and the market has retraced, and it has retraced up into the 618, the 618 retracement, and we'll just kind of keep an eye on it, man. Just kind of keep an eye on it. If we're going to sell the market, let's get rid of that counter trend line. If we're going to sell the market, all right, if we're going to sell the market has broken this trend line. No, actually, let's draw from here. So the market makes highs, it makes lows and highs. Then the market makes a higher low. Market goes up, makes a higher high. Then the market goes up, makes a higher low, but then the market makes a lower high. It did not break this high. Then the market breaks this trend line, making a lower low. So now we're going to wait for the market to test the backside of that trend line. And once the market breaks the backside, once the market hits the backside of this trend line and tests and holds as resistance, we will come in and you will sell the market. Hold up, gotta make that blue. We will come in and sell the market at a counter trend line break right there. But that's the signal that we have to get in order if we want to sell the market. Now, if we're looking to buy the market, that since the market is in the buy, since the market is uh, in a bullish trend, in a short-term bullish trend inside the sell zone, if you're going to look to buy this market, you can enter in on the counter trend line break. Once the market breaks bullish over that counter trend line, once the market breaks over that and it closes, then you could buy. You can buy that. Once the market breaks and closes bullish, then you can buy right there. And then we can bring in Fibonacci's to see if that'll constitute anything, any buying opportunity. Okay. So if you get any one of those signals, if we get that buying signal, we're gonna buy that market up to the 618, to the 1618D extension. And that right there is how many pips away? That is, at current price point, that is almost 172 pips away. So we can still buy this. You can still get that buying opportunity, 162 pips. Just like I said on the weekly time frame, how far we were away from the resistance, about 180, 190, and right now, daily time frame, we do have a sub ABC swing, and that Fibonacci, that would be what's considered a Gartley pattern. Let me see if I could. No, actually, I don't see a tool to actually do that. So, I never really looked in that. Yes. No, it's not cold outside. Kids getting ready for school. It's about that time, 6:35. Let's say I just wanted to bring you guys this here trade that I was looking at, the NZD Japanese yen, but that 1618D extension on the daily time frame. If the market breaks that counter trend line and holds, the market breaks this counter trend line bullish and holds bullish, and it enters back into the buy zone. Yes, we would buy that market then. But if the market holds at the backside of that trend, or the backside of the uptrend line, and then we break the counter trend, we have a counter trend line break to the south, then we will start selling the market, and we can start selling the market going down to the 1618D extension, because it wouldn't actually be a 786 retracement at that level. If it does hit this 1618D extension on the up AB swing, then we'll go to the green 118 the extension to the overall movement, because this is your overall AB downswing, and you have your sub AB swing inside of the down AB swing. So that is what will create a Gartley pattern. If I could draw it up real quick, I don't know if you guys will be able to see it, but let's try it. Let's change that color. Well, you have your market going up to your A, to your B, and the market going down to the C. Then the market would go up to D, and that would be considered your Gartley pattern right there. don't look too good. But that's essentially how what a godly pattern really looks like. But that doesn't, that's a little sloppy. But yeah, that would be it. You got your A to your B, then we have B to C, and then we will have C to D. Actually, before I go, I want to try that again. Because, okay, if we had A to B, even if I brought it up here, and then you have B to C, and then we would have C to D. That's probably something else I need to start, try to work on drawing up godly patterns and see how I can get them things to look pretty decent. But that's pretty much what what had happened. We have an ABC tool. Let me use that. Now I'm going into a little training right now. I mean, my analysis is pretty much done. I've told you guys exactly what I saw and what I'm looking at on the NZD JPY. Now I'm just having a little fun. Y'all cool with that? Okay, we got ABC tool, and it's pretty much what it is. No. Reset. Get rid of that. All right, try it again. Try it again. The A, you have your A. Then there's your B, and this is your deepest point. That's your C, and this would be considered your D. Whenever that takes place. Even that looks funny style. But yeah, I was just playing around with it. I haven't really went into it as far as actually drawing them up. But essentially, you guys know that a godly pattern really looks like that. You have your correction pattern inside of it. That's pretty much what a godly pattern is. You have your A, you have your up every boundary. Oh, wait. Okay, wait. All right, I think I see it now. Okay, if this is your X, okay. All right, the X would be the X. Come on, the X would be this swing up here. Okay, so that would be your X, and then we go to the A. Then you have your B, C, D. That looks a little better, doesn't it? Well, it's a nice try, but yeah, essentially X. You have a swing up, which that would be your X would basically be uh, uh, your A in the overall Fibonacci swing, and then inside of that overall swing, you have a sub swing that has an A to B, then a C to a D, and that would be considered a correction pattern. And then that pattern, then once it hits, once that A, B, C, D subswing hits, then the market will begin to retrace, and the market will start doing what it normally does best. The market will start doing what it normally does best once it hits that correction. Let me let's get another color in here. All right. So you have your A B swing here. You know what? Actually, no. Give me a full color. I didn't know it would do that. So you have your A. You have your A to B overall swing. Then on the inside, you have a sub swing of A to B, B to C, C to D. And you bring in that Fibonacci here. Bang. See, we have an overall Fibonacci swing, and then you bring Fibonacci down there, and then you see how A to B, then C goes to D, and then after that happens, then the market will go ahead and continue after it made its correction. Oh my goodness. Alright. Then once the market has made its correction, then it will start to wave back up again, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So that's essentially what a sub crown from that's what a sub crown inside of a overall crown. That's usually what that means when we talk about godly patterns. Man, I haven't done that in a long time, man. I haven't really just tried to draw up a godly pattern because I normally just go off of the Fibonacci's and try to make the trading simple because you don't want to get into a lot of stuff that might make your trading complicated. But that's essentially what it is. You have your overall swing, then inside of that you have a sub swing, A, B, C to D. Then the market will correct itself and go back into the direction that we're planning to go. So hey, thank you guys for hanging out with me. We don't really have to go over anything on the 1 hour time frame. That is just entry strategy. We found direction. We know where we want to go with the trades. We nailed it down to the market has to give us a signal on the daily time frame if we're going to buy it or if we're going to sell it. So that is it for me right now. I will be coming back with more analysis throughout the day. Just tune in, hang out with your boy, and we're gonna get it done. Hey, I thank y'all for I appreciate y'all for hanging out with me. Go to my YouTube channel. Actually, let's see if we can bring my YouTube channel up here. There's my channel. Joshua Forex Trader /gamer, because I am into gaming as well. So you guys can see my videos up here. And I'm trying to post daily, man. Trying to put out content every single day, as you guys can go back and see all my trade analysis. And that'll do it. I'll see you guys in the next video. I'm out.